Hello and welcome to the Road to Autonomy. The Road to Autonomy is brought to you in part by Stantec Generation AV. Stantec Generation AV combines some of the most experienced AV experts in the industry with the resources of a global engineering firm. Stantec Generation AV provides education, consulting, assessment, and guidance to any industry interested in autonomous vehicles. Learn more at stantec.com. Hello and welcome to the Road to Autonomy. I'm your host, Grayson Brulte. On today's episode, we're absolutely honored to welcome back David Welch, Detroit Bureau Chief, Bloomberg, and author of the fantastic book, Charging Ahead, General Motors, Mary Bara, and the Reinvention of American Icon. Welcome to the podcast, David.
Thanks for having me. Always great to chat with you, Grayson.
It's always great to have you here. We're getting close to spring training, soon pitchers and catchers report, and baseball's on the way, but we're here in a new year. The autonomous vehicle market's been through ups and downs, as we've seen all throughout 2022. What's your outlook for the autonomous vehicle market in 2023?
Well, I would say more downs than ups for autonomy in 2022. As you saw companies get into financial trouble, the stocks got hammered. Even I would say the value of Cruise within GM, as assumed by the analysts who cover the company, went down. Part of that was the route and tech stocks overall in the broad market. And part of it is, investors now just see autonomy as something that will either never pay off or will not pay off in any sort of investable time frame. So they're sort of discounting it to no value right now. So what's that have to do with my outlook for 2023? It's kind of only up from here for those who are actually doing stuff, the survivors who have money, and we'll get into that in a second. I do see continued tough times for those who are still trying to find money. And we already saw Aurora killed off. Argo killed off. That was Ford and Volkswagen's autonomous company. They defunded it, collapsed the company. What does that mean for Aurora and some of these other players? Aurora's going to have to find a partner, or they're going to have to raise money. And I think that'll be the story for Aurora this year, and it'll be one of the more interesting ones to watch, is can they show enough progress with the technology in terms of milestones to get investors to say, okay, there are some crackling embers in the campfire here that we need to throw some more wood on and try to get something going. Because right now, the stock is so low, all of those stocks, but especially that one, have been battered so much that investors are sort of discounting it. So, they've got to show progress with their trucking software and some of their partners that says they're ready to go. Their plan is to deploy in 2024, which is also when they say that they will kind of run out of money. So which happens first, and can they get more money between now and middle of 24? We're already in January here. I assume they're already working on laying the foundation for a capital raise. But the longer that goes before they raise money, and the closer it gets to the time when they can to deploy some kind of service that could actually bring revenue, their fate starts to look more like an Indiana Jones movie. So I'm not saying I don't have good technology, and I think Urmson's a really sharp guy, but it's tough. Autonomy, I think, it's difficult not only to make the technology work flawlessly, but to get a business case going. And what is that business case? There's a clear one for trucking that they want to do, but you got to get routes up. You got to get fleets of trucks deployed. You got to manage this whole thing. So we'll see. I do have a lot of optimism for Waymo and Cruise. I think when it comes to last mile delivery and when it comes to robotaxi ride hailing, we're down to what Dan Ammon told me several years ago. We don't need 12 autonomous companies. You probably will end up with, say, universe sort of like operating systems where you've got, Android and iOS. And in this case, you have Waymo and Cruise. They're going to be expanding into cities. They already are. They're expanding geographically. So that'll be fun to watch and to see how quickly they expand and how quickly they start to bring in revenue and how quickly they can get in the cities where they are deploying, how fast they can expand the geography. Expanded geography means more customers, means more revenue, but they've got to build vehicles. And I think GM Cruise will start with a combination of these Chevy Bolt electric cars that are in San Francisco, and they will have some of the Cruise Origin, the 4 to 6 passenger shuttle. That one, I think you'll see a bunch of those coming out, but the ramp up of all of the GM EVs built off Ultium, and that is an Ultium vehicle, has been pretty slow and will be slow at least for the first half of this year. So I wouldn't expect a lot of Origin shuttles out there, but you'll see them expand that business. It'll be exciting to watch that because, we're finally are seeing the general public get involved in this. There are some interesting companies like Gatik. You got some of these companies that are in the shipping trucking area. They're doing some middle mile. I think that's a great business model, right? Easy routes between warehouse distribution centers, stuff like that. I think some of these other companies will have the ones who are doing stuff right now and have raised money recently. There's some good stuff going on. Others will struggle.
There's a lot of good stuff in the industry. The passenger vehicle industry is clearly a two-horse race between Cruise and Waymo. I say that, and then the emotional people give me pushback, but they yet to prove that they can scale like Waymo and Cruise has. I'm a fan of Gatik. I like what Gotham's doing because they're focused on revenue. You talked a lot about Aurora. The one thing I've been thinking a lot about Aurora is actually two things. One, what if Aurora stayed private and never went public? What conversation would be having? And the other thing I think about is it time for Aurora to split the business in two and just focus purely on trucking?
I think they are focused on trucking mostly right now. When I talked to Urmson last, and I think it was late November, early December, he said that they were still working on the robotaxi side of it, but that he saw that as a development for later on. They really are focusing on trucks and trucking right now. So they may be doing work on that side, but I think there's so much of a focus on their trucking side that for all practical purposes, it's one company. I don't know that they need to split it just because I don't know that there's enough activity going on the other side to make a difference. If Cruise and Waymo build enough of a lead in deploying to cities, you could see Aurora just basically become a technology company for the trucking and delivery businesses. And if the value gets lower and the technology gets better, but the stock doesn't rise, maybe a big trucking company buys them out or buys a chunk of it. Based on the story I wrote, they are clearly open to someone talking about buying the company. So we'll see what happens with that. By the way, Gatik raised $120 million, which for Autonomy is not a ton of money, but for what they're doing is a decent amount of money. That's why I think Gatik has got some runway here, and what they're doing is not super hard.
Gatik also has partnerships. They have it with Coke Industries, so that all the international paper, all of that stuff. But then at CES, they announced the Microsoft investment. Microsoft's becoming a very interesting party in this whole autonomy thing. They have an investment in Cruise. They have an investment in Gatik. They have an investment in Spartan Radar. And Satya Nadella just keeps seeing to push Azure. Are they one of the most interesting companies in 2023 if Microsoft, they continue on the trajectory that they've been on?
I don't know if they're one of the most interesting. I mean, if you're talking about in the autonomy world, they're in the background, right? They've got a lot of money, so they're putting money into this. And you have to assume they're dedicating, and I know they did with Cruise, some cloud computing capabilities and some of their software brains and resources. So I think whoever they connect with is worth watching because they're going to have some assets that that can help them along. And it also tells you that Microsoft, this isn't a venture cap fund. They have to see something before they put money in it. So it's a good sign for anybody who gets funded by them.
Because in one sense, Microsoft, you can call them Switzerland or neutral because they don't have a Waymo program, where Google will be taking the same strategy, but they're not going to take the Google money because of the Waymo, or they're kind of boxed in there.
Right. Even Amazon, right? Amazon is tied up with Zoox. Microsoft's at the stage where they're playing bets with multiple players in multiple different areas of autonomy. And I think the reason they can be a neutral party is they provide services for any of these companies that can help them out. And if these companies make it, let's say Cruise does become the next big thing in autonomy and Microsoft is in there, they'd be working with Cruise as a vendor, essentially. And they can do that with anybody. I don't think Cruise is going to tell them, GM doesn't tell its seat suppliers that they can only sell seats to GM. So I think you're right. I think they can be a neutral third party that has their hands in a lot of different buckets.
And it benefits Microsoft. It benefits the Microsoft shareholders. The stock, I believe, is down 30% of the last 12 months, but at some point it's going to come back. Let's go to Amazon for a minute. Amazon announced 18,000 layoffs under Andy Jassy. There's rumors that Jeff Bezos is going to pull a Bob Iger and come back. And inside there, they have AWS, profitable division, but they have Zoox. Zoox's name, and you and I have talked about this for years, as at the forefront of the technology. They were out there, and then they just kind of seem to fall off the radar. They're not part of the conversation anymore. What do you think Amazon's plans are for Zoox? And I'm highlighting that because some of the 18,000 layoffs were in the hardware division.
The short answer is I don't know. The long answer is I kind of wonder if Amazon has grabbed Zoox long-term for autonomous delivery vans. That makes a lot of sense, right? Makes tons of sense. And near-term for a bunch of robotic machines moving around their warehouses or moving between distribution and warehousing facilities and that sort of thing. Whether it's middle mile vehicles or stuff inside the warehouse itself. There's a lot of stuff within the bare bones of Amazon, the operations side, that makes sense. And then the ultimate thing would be electric Rivian vans or Ford or GM vans with some sort of autonomous system. They're not going to get GM vans with a Zoox system, but if they buy an electric van from somebody else, could it be outfitted with a Zoox system eventually? So I do wonder, Zoox was, I think, pretty well focused on robotaxi. At least that's what I drove when I was out there with Jesse Levinson. So under new ownership, are there brains and resources being focused toward a more commercial B2B series of applications? That's my guess. That would make a lot of sense to me. Why would Amazon want to be in the robotaxi business?
The only reason I could think Amazon would want to be in the robotaxi business is to expand the Prime offering, perhaps offer a Prime mobility tier. But if Amazon does go that way, who manufactures the vehicles? Does that turn into Foxconn? Does Foxconn become the manufacturer for those vehicles, perhaps?
Amazon they've got a green issue. They're under criticism because of all these gasoline-powered vans they have cruising around the suburbs delivering one good to people and all the plastic packing and materials inside their vehicles. They need an electric vehicle strategy, a clean driving strategy. They could go to any number of players for that. And then the question is, does Zoox have a system? Last mile, maybe they get their act together and put some out. Rivian's been working on one. Maybe they get in that fleet game too. But those are the players where I think you would start. And there's one other one. What's the company that has the mini plants? There's one in Charlotte. We haven't heard much from them lately, though. Rival, yes. Yeah, a couple ex-GM guys are running that company. I think it's funded with some Russian billionaires' money. That's another potential player. But there are companies, I think Ford and GM are the two biggest players there to sell these vans. And look, Rivian, I think, is legit. And I think that's why the investment is there. But
Arrival, they're on the verge of bankruptcy. There's going to be a filing in the UK soon.
They go to one of those players. Foxconn could. That Foxconn platform is flexible where you can make any kind of vehicle, but they don't have a van right now that I know of.
They might not have a van, but they have the ability to manufacture at large scale, because Rivian concerns me. Bloomberg estimates you have a 65% chance of a recession. Rivian is hemorrhaging cash. You could say they bit off more than they chew. You have the truck side, and then you have the passenger SUV and the pickup truck. That's another question. Do they split in half? Do they just focus Rivian commercial and Rivian try to do two different companies? It just seems they bit off too much to chew for a startup.
No, absolutely not. I think they need, one of the great things about these electric vans, it's fleet business. And when GM puts out the Chevy Silverado electric pickup in, I think, May or June, is when that starts production. The first version is going to be a work truck fleet. And the great thing about that is the customers know how far they have to go. It's more fixed mileage. So they don't necessarily need massive range, and there's less resistance from your customer on that. And fleet customers often need a green strategy. And so it's a ready-made buyer, and it's easier volume. Same thing with the vans. BrightDrop's been showing, I think what they say, they're going to have $1 or $2 billion in revenue in a year from all the deals they've got with FedEx and others. So Rivian needs that. Selling trucks at retail is hard. Right now, Rivian, the production is small, but they have one competitor. That's the Ford F-150 Lightning. But in a few months, Chevy will be out there. By the end of the year, supposedly, this is a huge if because it's Tesla we're talking about, but the Cybertruck will be here eventually. Whether they hit the end of 2023 or not, who knows? Tesla's gotten better at manufacturing, but there's still issues. But they will, Rivian will have more competition on selling trucks to guys like you and me. Actually, not guys like you and me, because I don't think you and I would pay $80,000 for a mid-sized pickup. I'd rather try to get one of Chevy's work trucks for $40,000 that's bigger. But anyway, they have a lot of reasons to keep those two businesses together because you get to scale on battery and electric motor components a lot faster when you're working a fleet business alongside your retail truck business.
Okay, fair points. When are they going to have to tap the debt markets to raise more capital?
I would not want to have to tap debt right now because interest rates are so bad. They have they have 18 billion. Actually, I can look it up while we're talking here. They have a decent amount of cash on their books. I can't remember what they said about how fast they're going to need to go back to the markets. But at the end of 2021, they had $18 billion. And when they go through last year, so at the end of third quarter, they had 13.3 billion. Now, that can go up in smoke in the auto industry very quickly, but that tells me they don't need to go back to raising capital imminently. Maybe later in the year. I could see them trying to issue equity. If the equity markets continue to recover, it might be easier to do that than go out to get a bunch of debt at high interest rates. We'll see. I don't think they're an immediate need for it, though. I think all the other EV startups are going to be an immediate need, and some of them may not make it. I could see money by the end of the year, maybe two, or at least wanting to possibly raise some.
Lucid's lucky because they have the Saudi Sovereign Wealth Fund, and they keep pouring in capital there, and that's the way the oil's going. That's pretty much an endless pocket there. And look at the green strategy.
There's Saudi money in Rivian, too. It's a smaller amount than it used to be. But they've got Amazon money in there. And this is total speculation on my part. But if the market was really tough, both for debt and raising equity, could you have something like Amazon doing a PIPE investment where you simply issue new equity to Amazon in exchange for cash? It dilutes other shareholders, but it does give the company a slug of money to keep going. There are things like that could happen. You have an angel investor that just buys equity, new equity there, as opposed to a secondary offering where they have to go market it when they have a new stock.
I'm not sold on Rivian from a business standpoint. I understand the financial backers, but when you look at all these strategies, it's all living inside of GM. GM has BrightDrop. They have Cruise. They have the Ultium battery. Why does GM not get enough credit for all the pieces of the pie that they have in-house?
In my book, Charging Ahead, in the last chapter, I explain this. No, seriously, GM's an odd phenomenon in a way. For some people, it's a company people love to hate. I think because they were the big, arrogant American company that went bankrupt. And at the time they went bankrupt, it was during the financial crisis. And I think from a stock perspective, they had the hot hand for a while, but they're still not selling enough EVs. And there's sort of a wait and see that 3 years of talking about Ultium batteries and this big family of EVs, it's a real program. They are absolutely coming. But I still have people hit me on Twitter every time I read a story about GM saying, "Oh, all they do is issue press releases. Where's the production?" And we are all waiting for the production. You have a Hummer and a Cadillac out there being sold, but in very small amounts. So GM just they have to prove it beyond a shadow of a doubt because they have so many doubters. That's really the bottom line on this. And I think if the Cadillac Lyriq and the Hummer pickup truck are big hits, and it looks like they will be, they've got a big back order of orders on these things, and the Chevys that are coming out this year do well, that'll start to change. But at the moment, there's a big wait and see on the company. And look, it's one of the reasons I wrote about Mary Bara is, Mary's never issued, I should say, GM rarely misses their guidance for profits with the street. And she has rarely said she's never really said something that they're going to do something strategically and not do it. And she's made some very bold moves, cutting some really money-losing businesses, and then by buying Cruise and by sticking with Cruise when rivals Ford and Volkswagen decided to get out of the autonomy business. She makes bold moves and she does what she says. As Adam Jonas said, there's execution risk with GM. So it's not so much, I don't think people necessarily question Mary's leadership. It's can the company pull these things off? I think they can, otherwise I wouldn't have written a book about it. But I couldn't guarantee that they will either. GM does have a habit of stepping on itself at times. I mean, I asked Mary when I was interviewing her for the book, and now this interview would have been January of last year, what was going on with them. She just fired Dan Ammon as head of Cruise. Their first EV was on fire, and they couldn't sell it. And Ford stole a march on them by coming out with the F-150 Lightning. And all of a sudden, all the attention was on Ford. And I said to Mary, do you sort of feel like GM suffers from this generational curse at times where these bad things happen, especially with the Bolt fires? It was almost like ignition switch all over again, just on a smaller scale. And she said, look, you run a big, huge global company like this, and you're going to have problems. But, I mean, it's just right when GM is launching EVs with Ultium, their old program has all these fires. It's, stuff like this happens. So, and to GM, it seems. So I think there is execution risk. There is question whether or not they can pull off this big, bold plan, and they're going to have to prove they do it. That's why they don't get the credit for it.
If they can execute, they deserve to get the credit. The question is, can they execute? And if they can execute, they deserve the credit, and it'll be a really great business. Mary made a lot of bold moves. I started looking into the economics and financials of Lyft lately. The company is going to be sold for a fire sale at some point. Who, in your opinion, steps in, makes the bold move, and acquires Lyft and folds it into an existing organization?
I guess you got to start with, what assets does Lyft have? Pretty good brand name, pretty good app, but those aren't that difficult to replicate. There's not a big moat around the second brand name in ride hailing, and there's almost no moat around this app because Cruise has its own app that they developed in-house. So developing something that connects rider with ride, which Uber and Lyft do, is obviously not that hard to create. Now, to somebody else who wants to get in the autonomy business, robotaxi, buy it for like turnkey app and customer base and brand name, possibly, but who would that be? Who out there is, like Waymo doesn't need them. So who would be wanting to get into robotaxi that would need that system, that brand name? There's some value there. I just don't know who really needs it, particularly at this point in the investment cycle. And where the market is now, no one's buying anything on a flyer, and market cap's still almost $5 billion. So that's a big check for anyone to cut to get this customer base. And I don't know. I mean, first of all, I don't know about you, but I've got Uber and Lyft on my phone, and I don't really care which one picks me up. I'll go on there and shop price and how quickly they can get to me. Don't give a damn which one it is. And I think everybody else is there too. And it's not a profitable business. So way too expensive for what it is right now for anyone to buy it.
Lyft has a political problem. They're going to try and pass some state bills that are going to devalue the company pretty astronomically. You're probably going to lose another $1.5 billion of market cap when they roll out these political agendas they're rolling on.
Are you talking about which company?
Lyft. Lyft has an agenda they're going to start rolling out in state legislative houses that will probably knock off $1 billion to $1.5 billion in market cap because it's going to be so toxic. I start thinking a lot about Lyft and looking at where to go. It's an industry of booms and busts and bankruptcies. Does an airline step in and try and cut a deal to integrate into the operations, moving passengers to and from airports? If the luggage is lost, they'll take the luggage to the destination. Does an airline step in?
It's sort of like with Uber. There's only value here if you can take the driver out because they lose money doing what they do. So I don't think anyone does. I think the only way Lyft does something on an M&A type basis is maybe some kind of partnership with one of the AV companies or a car company or one of the car rental companies or something like that, in a way that gives them something, a synergistic way to lower costs and find some new business and get some funding. I think they need an AV strategy, to be honest with you. This goes back a few years, but Travis Kalanick said that Uber doesn't make money unless they pull out the driver with autonomy. And then they don't really have an AV strategy.
They sold Level 5 to Toyota, Woven Planet. So is it just a shell of its former self that one day just gets delisted and disappears?
Talking about Lyft or Uber or both?
Lyft. I
wouldn't predict that. Anything can happen. If you have $5 billion in value, you're a long way from being delisted. But they've got a tough road to get to profitability, I think, especially if there's a recession.
Another one that seems like they're on the tough road, in my opinion, is Motional. Where does Motional fit in all this AV space? The individuals I know that have been in the vehicles say the vehicles are good, but they're having a really hard time. They drop off and pick up. The braking is not there. But they've got the joint venture between Hyundai and Aptiv. Where does Motional fit in this whole big AV picture?
It's a tough question, too, because Cruise and Waymo have so much more money. That said, it's so early in the game. Cruise and Waymo are basically operating in 3 cities. So there is a lot of opportunity for any of these guys. The question I have for Motional is, do they have enough money to take advantage of it, and can they get the money? So in this market right now, no one's getting money. So, I put them kind of in the same bucket as a lot of the other smaller AV companies. If you're not Waymo or Cruise, and I'd sort of throw Zoox in there just because they're in the Amazon empire, where to get the money to keep developing. I mean, Gatik, I think, is in a unique position and a pretty good one in the sense that they're doing middle mile, which requires less interstate regulatory work than trucking and requires less data than robotaxi. And it's less complicated and there's a clear need for it. And they've got partners like Walmart that want to do it. So they don't necessarily need to have many billions in money raised to get that challenge done. But I think for robotaxi, you do, and that's really where Emotional is. So they're going to have to raise cash at some point, right? So I kind of put a lot of these companies in that boat of needing money.
So you're an investor, and let's just hypothetically say Waymo expands into 6 new cities in 23, Cruise expands into 6 new cities in 23. So let's just cut the math and make it simple. Say they're each operating in 9 cities. As an investor, do you start to question the thesis around Motional, since they'll all be in 2, Vegas and LA?
That's the route that they're doing? Maybe. One thing that I think is interesting with Cruise and Waymo is this is something that Kyle Vogt told me about Austin and Phoenix. They were actually able to start getting data on traffic patterns and kind of getting the mapping data and all the geographical data they needed by renting cars and driving around town. So before they even had vehicles there. So is Motional able to get a jump start on some other markets to get scale in that kind of way? If that's the case, there may be a way to expand without spending a ton of money. And that's what the startups always tell me is, they do things smarter and leaner because they're startups. And I think that works for a while, but eventually you need vehicles that are equipped with this expensive software and hardware system. I hate to be doom and gloom on the startups because it's such a crappy thing to say, but these are big challenges.
Let's go down a level from the major leagues. You and I are both baseball fans. Let's go down to the minor leagues here. I want to highlight a company that has a very interesting strategy, May Mobility, operating in rural areas without public transit. That's a really interesting business. There was a Bloomberg opinion piece a few weeks back that shed some light on their operations in Minnesota. What are your thoughts on May and their strategy of focusing on rural America where there's not transit opportunities for individuals that have to go to the grocery stores or get to the doctors?
I've always kind of liked May, and I've talked to them because they've got one of their early pilots was here in Detroit. And what they do, they have always looked for pockets where commuters need service. Sometimes they are bus routes that have been abandoned by the buses because you had 5 people on that bus every hour instead of 30, and May would do that. And rural areas are great for that, particularly for elderly people who live out there. The challenge is, can you find the routes that they need the most? I can see the research side of that being a bit difficult, but I think it's a great idea. The one thing I would say about Waymo and Cruise is, in some ways, robotaxi is an answer to a question nobody was really asking. No one said, I need a ride when I want it, and it can't have a driver in it. They don't really care if there's a driver in there or not, as long as the service is good. Now, what Cruise will say, and they're not wrong, is that the quality of service you get from Uber and Lyft drivers is hugely inconsistent, and they can offer a better, more consistent service. And I think they're right about that. So far, it's not meaningfully cheaper. And that was the original promise of robotaxi. You get the driver out, and it's a profitable business that's also cheaper for riders. So far, it has not been that. I think eventually it could get there. So really, for Waymo and Cruise to develop a business that does answer a question that people are asking, they do have to deliver a better service. And I think they will. It also should be cheaper, and they should be able to make money doing it. It doesn't have to be super cheap. It doesn't have to compete with the subway, but it should be cheaper than the business that can't make money with a driver in the car. Now, May, the reason I like May is they're finding transportation for people in areas that don't have it. I mean, I'm sure there could be Uber and Lyft drivers out in rural areas, but there probably aren't many. And if you do find one, you're probably waiting a long time for that ride, or you could be theoretically, because there's not as much density. I mean, you can't get a cab out in those places either. So I think May's got a cool business. Do they have the money to really go at it and develop it? So far, they've managed to keep doing it. I think it's a very interesting company. Their system's also different in that at least the last time I rode it, they had hardware out on the routes. And these were pretty well fixed routes. They weren't taking you anywhere. I think that's the next thing for them is can they expand the areas where they provide that service if you're out in rural areas? Are they going from one depot where somebody has to go get to somehow, and then you're taking people into a central business district or a health and medical complex or something like that? But there's a lot of good there. They are finding places where people are underserved and they're trying to hit it. I think it's a wise move.
It's a very interesting business. And when I look at their business, I'll give you a prediction without a timeline. Toyota's May's largest investor. Toyota's going to basically force a merger between Uber's car business and May, and they're going to primarily back that at some point in the future. When that happens, I don't know. That's what I see happening, and that will allow Aurora to focus truly on autonomous trucking. Consolidation's going to continue to come to the autonomous trucking industry. So right now we have Wabi, Embark, TuSimple, Kodiak, Plus, Aurora, and Waymo. Who's going to step into the consolidation? Will a traditional trucking company step in? Will a railroad step in? Or will they start buying each other and trying to compete with Waymo?
So, who's going to buy which companies, do you mean?
If you look at the current stack of autonomous trucking today, I base it this way. Waymo's the strongest based on balance sheet. Kodiak has the biggest momentum. And then you got Torque with Peter von Schmidt. They've got a really great stuff cooking over there, but they've got Daimler backing them. Does Daimler make a strategic move to try and consolidate the market further and combine a team with Torque?
Yeah, look, there's a lot of stuff that can happen here, especially as the prices of these companies go down. I don't think the trucking companies or railroads, I don't think they necessarily need to own this. And I don't think they want to spend the money to do it. I could see them wanting to get equity tie-ups to essentially lock in a partner and guarantee that there is joint development work going on. So, maybe they take a stake in these companies, and there are a number of ways they can do that. I can see that. I don't need to buy these players, but I don't think they need to own it. That's an Elon Musk idea to bring everything in-house, but the rest of the business world doesn't necessarily want vertical integration.
On the Elon Musk front, I've been studying the Dojo computer, the supercomputers capable of 1.8 exaflops. We had the announcement of TikTok parent ByteDance recently invested in Hamo AI to create Mono Oasis, the largest computer dedicated in China to autonomous driving. It's only 670 petaflops, a third of what the Tesla Dojo computer can do. At some point, Tesla's going to have to be forced to open a new revenue stream. Do you see a point where Tesla makes the Dojo their version of AWS to drive that long-term sustainable revenue for the company?
I don't think Tesla needs a new revenue stream because if autopilot stops having issues and full self-driving work, those will be subscription services in the same way that Super Cruise and Ultra Cruise are for General Motors. That's another revenue stream. And I also think Tesla does have a lot of growth in the sense that they basically sell 4 vehicles right now. Big sedan, medium sedan, big crossover, medium crossover. They're going to have a pickup. They've got the semi-truck out. They have more streams of revenue. But one of the reasons Tesla stock was, big emphasis on was, so stratospherically priced for so long, was this idea that Elon was just a master product development guy and came up with awesome ideas all the time. So I think they could, and if it's all systems going, they can make a lot of money on it. They absolutely will. I don't think there's pressure on them to get it out fast, but I think Elon doesn't want anyone dallying about anything. So it's a viable option for them. I just don't think that's the only place where they're going to find new revenue. They've got growth to go overseas too. The reason Tesla stock is in the can, I think, is not, there is some discount to the stock now because of Twitter distraction with Elon. None of the shareholders like that. But I think the bigger issue with Tesla right now is investors are realizing that maybe it's not a hot growth stock, it's a lukewarm growth stock, because Tesla is still growing. Horror of horrors, instead of 50% growth in sales, they grew 40%. Most companies would kill for 40% growth in a year. But they missed a target, they missed what analysts thought it was, and so investors thought, okay, the growth is finally slowing. That is enough to bring the multiple down, but it's still valued well more than any other car company. So this is still a growth story, it's just not a hot one. And do they use some of these things you're talking about to re-energize growth? They can, but I think they've got other stuff to do that too.
To re-energize growth, how about introducing a true SUV to compete with the SUV market.
We haven't heard Elon talk about that, right? He's talked about the semi-truck. You know, what's interesting about that is, would Tesla do that? Because, well, think about the Cybertruck and the way Tesla is entering the pickup market. They are not going with the straight cabin and box pickup like Rivian, Ford, and General Motors are. They got this video game looking angular, edgy thing that looks like the designers had only a ruler and pencil with them when they went out to do this. You know, there were no curves. This is just straight lines and angles. They might have had a protractor with them too. But it's, and everyone made fun of it. But I remember talking to, I think it was the dean of the Art Center College in Pasadena. And he said, you know, at first I thought it was silly. He goes, but then I thought about it. And he said, you know, hang on. Tesla reimagined propulsion by putting out EVs that other companies didn't want to do. Then they reimagined what EVs are by making them cool and making them sporty and having huge touch screens. And they rethought everything. So why would they go with a traditional design pickup truck? So then that brings up a question. If what you're saying has legs and Tesla's, and they probably are, like, this is what designers do. They sit around and draw up stuff that may or may not ever get built. If Tesla has people looking at your big traditional SUV or even your mid-sized traditional SUV, would it be something totally different, reimagined? Would it have a design like a Cybertruck? Probably not, but it might. I don't know. I think they would do it, but with a different twist.
A different twist would lead to sales. I believe there is a very large market that's looking for an electric SUV.
I think you're right. And also, I think if any other car company put out a Cybertruck, it wouldn't do well. But with Tesla's brand, I think it will. Tesla's brand is very powerful, but it's also a brand that says you're at the forefront of technology. It's a roguish brand, for better or worse. And I think something like Cybertruck works for them, and maybe there is a new twist on an SUV design that they could come out with that would set them apart. And also, I think you're right, like a truly electric, roomy SUV, GM's going to have those. It might be a couple of years before we see something like a Chevy Tahoe that's electric, but they're going to have a pretty full lineup in a few years. Rivian too. Look, the R1S that's a real SUV. It's just not that huge.
No, and I don't feel that it's that appealing. I don't think the Rivian brand is nearly as strong as the Tesla brand. The Tesla brand is strong.
No, it's not. You brought up Rivian before. It sounds like you're pretty down on the company. I think the challenge Rivian has is that they are selling mid-sized pickups and SUVs at really high prices. Now, they have a unique design, and it's driven the pickup. It's a great truck, but it's still very expensive for what it is. It's a luxury vehicle. So how much volume can you get there? And can they start to bring the price down, develop other vehicles to boost volume? That's what they're going to have to wrestle with going forward.
Luxury vehicles pushing the envelope. I don't feel it is a luxury SUV. I don't feel there is any luxury all-electric SUVs in the market today. Everybody wants, and I'm a consumer that wants one, an all-electric Range Rover. It'll be the best-selling all-electric SUV in the world. There's a huge demand for a high-end luxury SUV, and Rivian is not a high-end luxury SUV.
There's a company in England that is to basically, I forget his name. He's the richest man in England, and he has his own startup, basically selling his own SUV that looks like it's electric, and it looks a lot like, it looks more like a Land Rover Defender than the current Defender. The current Defender kind of any old Range Rover. I mean, the more I see it, the more I kind of get how they see it as a Defender. But it's still, this guy's Defender has a lot of actual Defender cues to it. It's not as smoothed out. And I can't remember if I can find the name. Ineos. The Ineos Grenadier, Jim Ratcliffe. I was told he's the richest man in England. And I think the genesis of the story was he was irritated that there was not an electric Defender. So he just started his own company, and the designers essentially knocked off a Defender. And they would not call it that, but that's what it was like to me.
Well, that's what's going to happen in the future. If nobody builds this, individuals around the world that have the means and resources will build it. Shifting back to autonomy, David, over the next 12 months, what do you think we're going to see is going to happen in the autonomy market?
Big players will continue forging ahead, and the small players will continue looking for money and develop it. I think you'll see, I bet by the end of the year, Cruise is in at least 5 cities. And Waymo similar. Waymo and Cruise seem to be moving in lockstep. It will all be in the smile states, Sunbelt, because it's easier for autonomous sensors to see, quote unquote, and won't be massive volumes of people, but they will be growing. They'll be getting more data. They'll be getting more scale, and it works. So I think you're going to see some growth there. I think Gatik will continue to develop the middle mile business. Trucking is the harder one. Then there's a real need there because nobody wants to drive truck anymore. But I do think the regulators seem to be okay with it, but I still think that when you start putting 20,000 pounds of freight in a vehicle with no driver, and you have to go across multiple state lines, to me, that's still a pretty big challenge. And it's solvable. But I think, like with everything with autonomy, it's going to take longer than we all want and we all expect.
We solve the challenges through public trust. That's where we have to build both the passenger side and the trucking side. We have to build public trust. I agree. Cruise, Waymo, most likely 5 cities, if not more. Hopefully, some of those cities are in Florida where we have a great regulatory environment. And Cruise, Waymo, we welcome you in Florida with open arms. And David, as we look to wrap up this insightful conversation, what would you like our listeners to take away with them today? You
must have been in HR doing job interviews at some point. Open-ended question nobody wants to answer. For autonomy, it's not an exciting takeaway, but the world's still going to have to be patient. I think Dan Ammon, who's no longer in that business, but I think he was right. It is a moonshot. There are a lot of things that still happen. I think as well as Waymo and Cruise have done with this. And I do think, by the way, robotaxi is a huge challenge just because the amount of mapping and data you need in cities. You will have issues. I think the biggest issue for autonomy in terms of safety, because the cars have done pretty well. You haven't had a lot of accidents, and you have not, thankfully, knock on wood, had fatalities since that Uber one. But I think one of the toughest things for autonomous systems to deal with are human drivers that break the law, do crazy things, or do dumb things. In the cases of the accidents where Cruise has had NHTSA taking a look at it, in every case, the human drivers were doing something wrong. Now, if you're Cruise, and they don't do this, but if you're an autonomous company, you can't just say, well, it was the stupid human. If you're building a vehicle, the vehicle has to deal with whatever is out there on the road. And that could be dogs, that could be people in crosswalks, that's immovable objects, that's weather, and it's stupid humans, or drunk humans, or irresponsible humans. It's part of what's on the road. So these systems have to be equipped to do that if they're really going to improve safety. And I think they will, but all these things take time.
It takes time. Autonomy is going to be here. If you're interested in the automotive business and you really want to get a good sense of where GM's heading with Cruise, I highly recommend you pick up a copy of Charging Ahead, General Motors, Mary Bara, and the Reinvention of American Icon. Because the future is bright, the future is autonomous, and the future is profitable revenue and scalable operations. David, thank you so much for coming on the Road to Autonomy today.
Sure, man. Thanks a lot. Glad to be here.
Thank you for listening to the Road to Autonomy podcast. If you've enjoyed listening, please rate, review, and subscribe on your favorite podcast platform. Want to get in touch? Follow us on Twitter at Road to Autonomy or email podcast@brulteco.com. The Road to Autonomy is produced by Brulte & Company. The views and opinions expressed on the Road to Autonomy podcast do not necessarily reflect the views and opinions of Brulte & Company. The content discussed on this podcast is for informational purposes only and should not be taken as legal, tax, investment, or business advice.